It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
As time goes on and as you chip away at that debt, and hopefully at the same time you're growing and morphing through your career and getting a better income, that financial weight of that mortgage should become less over time.
And that is Nicola Powell from Domain, and welcome back to another real estate podcast, talking property from Perth to Cairns and every city in between. And you can stream us, of course, on multiple platforms, including iHeartRadio, Spotify, Apple Podcasts and Amazon. If you would like to drop us a line, you can do that. Our email address, myrealestatepodcast@gmail.com. We would love to hear from you. Domain's latest first home buyer report that was recently released reveals that mortgage stress has worsened across Australia, with more cities affected than 5 years ago due to rising interest rates and property prices. A typical 24 to 35-year-old couple on average wages now faces tougher conditions, from soaring entry-level house and unit prices to longer saving times. In fact, in 2019, only Sydney and Melbourne had mortgage stress for entry-level houses. Now, all capital cities except Darwin are impacted, while Sydney, Brisbane and Adelaide now face unit mortgage stress. And we're going to drill down on this once again. We're welcoming back to the Real Estate Breakfast Nicola Powell from Domain. And good morning to you, Nicola. Just with that preamble mention, the landscape really has changed a little bit, hasn't it?
Good morning. The landscape has changed very much. And I think, property prices are important, but they're not the only measure of housing affordability for first home buyers. And that mortgage serviceability is a really important other aspect, because, you may have saved your deposit, you're ready to make your purchase, but it's the ability to comfortably meet those mortgage repayments. Because I think the last thing that a first home buyer wants once they've purchased their homes is to not have any cash to spare. And really struggle meeting that mortgage repayment. And, with this report, we really focused in on the prime age of people trying to save and break into the property market, which was aged between 25 and 34. And we also focused on entry prices. So this is the lower spectrum, the lower price of our housing market, which is called the 25th percentile. And as you mentioned, many of our capital cities now, particularly for entry houses, all of them are in mortgage stress apart from Darwin. Some of them, it is quite extreme. So when you look at Sydney, it takes almost 58% of a couple's income to meet the mortgage repayment of an entry-priced house. Now, that is an extreme amount. And just to remind everybody that mortgage stress is determined at 30%. So it is recommended that you dedicate 30% or less of your income towards mortgage repayments. And once it edges above that, that's it when it becomes very financially straining for family budgets.
All right, well, let's have a look at the mortgage stress then, which is, as you say, it is more widespread in our combined capitals and among entry-priced houses within regional Australia, offering the best affordability. So perhaps you can talk to that.
Yeah, so regional Australia does offer the better affordability when you're comparing it to our capitals. So 33% of income is needed to cover the cost of an entry-priced house in regional Australia. When you compare it to the combined capitals, that's sitting at about 47%. So there's a massive difference, 33% versus 47%. And I think, when you're looking at an isolated figure like that, nothing allows you to tell that affordability story more so than those two figures. We know that many young families, many young couples and singles move into regional Australia in order to seek the ability to make their purchase. And they are driven not only by that lifestyle, but the affordability that regional Australia offers. And, when you look at some of our individual capital cities, up there, Brisbane, 46% of income for an entry-priced house. That's how much income it takes to cover the mortgage repayments of an entry-priced house. Sydney, almost 58%. These are extreme levels. Even Adelaide, Adelaide's seen extreme rates of price growth. 46% of income is needed to cover the mortgage repayment of an entry-priced house. And when you see figures like that, what I think one of the growing segments and trends that we've seen from first home buyers is they become a rent investor. And what that means is they continue to rent in an area, a high-priced market like Sydney, like Brisbane, and they purchase in a more affordable location. And we have seen the rise of the rent investor, particularly in a market like Sydney, and they continue to rent in Sydney, and then they look to purchase in other locations that are more affordable. That might be regional Australia, or it might be even cities like Perth, which also has much better affordability in comparison.
Yeah, and when we're talking about first home buyers, it's amazing how many times we find in a calendar year that we're talking about Darwin. And interesting with your breakdowns that Darwin is the only city free of mortgage stress for entry-priced houses, with repayments taking up 27.7%. Tell us about that.
It is. It's certainly that tall poppy, I think, Darwin, standing out as that first home buyer location that really is much better on the budgets. And when you look at that proportion of income needed to service that repayment for an entry house, it's actually declined over the last 12 months. I think that's reflective of more subdued property market conditions overall. We haven't really seen prices do much over the past 12 months. And when you couple that with in terms of wage growth, which we have experienced quite strong wage growth, I think that is, helping to paint a much better picture overall for Darwin.
We are talking mortgage stress with Nicola Powell from Domain, and we'll have more of that after this.
We dive deep into topics like buying, selling, investing, and maximising your property's value, from mortgage advice to the latest property data and trending numbers. Your real estate journey starts here.
Where there's been a flood, and you hear these various people saying, "Oh, don't worry about that. That was just a 1 in a 100-year flood. No worries at all." And it's a little bit like betting on the Melbourne Cup. Nobody truly knows the outcome.
We did all our research, and the information that we were told is that it would be a 1 in 100-year flood, and that the level of water would just be at the bottom of our property. It was 6 feet at the bottom, over 6 feet at the bottom of our property for the first flood, and the second flood, it was higher again. So you can do all the research and all the due diligence that you can, and there still can be a not so positive outcome. And I think that people who've gone through these flooding events or other weather events that have involved their property and their home, it's not just bricks and mortar, it's their home. I think to be able to give yourself some grace in that, I did all of my due diligence and still this happened. We can be as wise as we can be, and still things don't always play out.
Navigate the world of real estate like a pro, with expert insights, opinions and trends to up your game and knowledge when buying your next property.
Nicola from Domain is with us, and I want to get to Sydney, Canberra, Melbourne, Brisbane, Adelaide and Hobart. They have all exceeded the benchmark for entry-priced houses. Sydney and Canberra are the most affected.
They certainly are. When we look at Sydney, it really showcases the financial impact of high property prices and what it has on first home buyers. Almost 58% of income is needed to cover the mortgage repayments of an entry price house. This is the most extreme out of all of our capital cities, but also Canberra is up there. It's almost 47% of income needed to cover the mortgage repayment of an entry price house. In Canberra, though, what's interesting is it has slid. It has become smaller over the past year, but it's still up there, and really just shows how unaffordable some of our capital cities are. But I think one of the aspects of this report is we looked at entry unit prices too. And when you look at the landscape for affordability in the unit sector, it is much, much better. And I think what it does showcase is realistically for most first home buyers, their first home does come in the shape of a unit.
Yeah, so we were just talking about Darwin being the only city free of mortgage stress. I want us to now go to those entry-priced units. The same situation is more encouraging. Darwin has the most affordable units. Probably not much surprise. Their repayments requiring only, I think the figure is 17% of income.
That is correct. So Darwin, again, is better outlook for first home buyers in terms of that mortgage affordability. But there are other capital cities that have that fall below that mortgage stress. So the cities that are in mortgage stress for entry units are Sydney, Brisbane, Adelaide only just, and the other capital cities, so that's Melbourne, Perth, Hobart, Darwin and Canberra, they all sit below that threshold for mortgage stress. So, for example, in Melbourne, it's 28%, just almost 28% of income. In Perth, the outlook's much better, 24% of income. Then in Hobart, it takes 29% of income, and in Canberra, 27% of income. But on the flip side, we were just talking about Sydney for entry houses taking a whopping 58% of a couple's income to meet the mortgage repayments of an entry-priced house. For units, it's still in mortgage stress, but only by a few percentage points. So it takes just under 36% of income of couples' income to meet the ongoing mortgage repayment for an entry unit. So it does showcase that units definitely offer that greater affordability. And one of the things that is important to highlight here as well, we have to remember that when you first take on a mortgage and you're fresh into the housing market, the debt burden is most prominent in those early years of owning that property and having that mortgage, because you have low equity and you have a high amount of debt in comparison. As time goes on and as you chip away at that debt, and hopefully at the same time you're growing and morphing through your career and getting a better income, that financial weight of that mortgage should become less over time.
It's interesting when you look at these numbers, you can see why, especially that breakdown of the 25 to 35-year-olds, there's quite a contrast between these cities in terms of how much of your income is being spent. And, this is the contributing factor why people are more than happy to cross over into different states.
Absolutely so. I think what the report really demonstrates is that outlook for first home buyers is very different depending upon the city in which you live in. The outlook is much better in some cities. So, for example, Victoria is actually one of the states that's leading the way for first home buyer participation. And that is because Melbourne is much more affordable, but also property prices haven't really done a lot over the last few years. So we find that changes to economic conditions do impact first home buyers and much more sensitive to changes, for example, in price or changes to the cash rate. And the fact that in Melbourne, we've seen prices, dip a little bit, but pretty much do nothing, that's actually created really great foundations for first home buyers to get their foot on the property ladder.
Always a pleasure to chat with you, Nicola. You've always got all of the numbers, all of the facts coming out of Domain, and coming back onto the Real Estate Breakfast. Enjoy your day.
Thank you. Thanks for having me.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs and hidden gems.
The more owner-occupiers that we're putting in these beachfront apartments and beachside apartments, occupancy is at an all-time high and there's not a lot of empty rooms.
As I mentioned, we've got these young tech entrepreneurs and social media stars, if you can call them that. When you have these influencers and so many of them coming and gravitating towards Surfers Paradise from people with a high number of followers for Surfers Paradise.
I couldn't agree more. It's the new way to market your property now on the Gold Coast. But an apartment in Surfers Paradise can offer a lot more privacy than what a house could back in the day. So I think they're enjoying the fact that, they're chasing the lifestyle and the location, not necessarily a big, block of land, or their priorities are shifting.
We connect you to the best real estate information across Australia. The Real Estate Podcast.